Hello and welcome to the next video in our ongoing series of mortgage-related Q&As with mortgage experts throughout the state of Pennsylvania. Today we're talking with Shane Whitteker. Shane is the owner and chief broker at Principal Home Mortgage. Today we're going to be speaking with him about first-time home buyers in Pennsylvania and some questions that are commonly asked by people who are in Pennsylvania and thinking about purchasing a home for the first time. And the first question that we have here is, do I need a down payment? Shane, what do you think? Is it a good idea for someone who's a first-time home buyer to consider a down payment?
It's definitely a good idea to consider it. There's a number of options that open up with more of a down payment. It depends on the type of mortgages you qualify for, but the down payment option does open up some, more avenues. So there are some mortgages that don't require a down payment. That would be the VA mortgage or a USDA mortgage. They're both limited though. VA, you have to qualify from being in the military, and USDA is limited on the location of the property, and also it has income limitations where you have to earn below a certain amount based on the number of people in your household. So most clients do require a down payment. FHA requires 3.5% down, and conventional loans require a down payment of a minimum of 3% typically. So having a down payment lined up definitely is required for the majority of home buyers, prospective home buyers.
Okay, and I guess a related question to that question is, how does someone who is looking to buy a home for the first time, how can they know how much home they can realistically afford? What kind of tips do you have as far as that's concerned?
First thing you need to do is contact a mortgage professional. Get with your mortgage broker, figure out what programs you qualify for, and then we will, figure out basically what debt ratio maximums are associated with that mortgage program. We calculate debt to income ratio based on your current debt and your prospective debt with the home that you're planning to purchase, qualify you at that level. Different loan programs have different maximum debt to income ratios. As an example, FHA will allow for quite a bit higher debt ratio than conventional. So, sometimes we run into issues with the type of home you're going to buy as well. Some homes don't qualify for FHA. So, you definitely want to talk to somebody on my side of the business that understands debt ratio and how to set that up. And then you also have to keep in mind, your personal budget. So at the same time you're figuring out what the max you qualify for is, you definitely want to have run your own budget so you can, tell your mortgage broker what you're comfortable paying. That may not be the maximum that you qualify for.
Okay. And so the main takeaway there is it's always a good idea to contact someone who is a professional within the mortgage industry. They're going to understand the different things that you're going to need to know in order to move forward and whether you can move forward.
Absolutely.
Your credit score, how important is your credit score when it comes to being a first-time home buyer? Is that something that is a deal breaker, or is that something that can be worked with?
So credit score is definitely an important aspect of qualifying to buy a home. It is, first of all, if it's too low, then you may not qualify for any loan products. The credit score qualifications differ on, they're different for each type of loan that you may be interested in qualifying for as well. So that can limit your credit score level, can limit what products you qualify for. So, I definitely tell people that they should check ahead of time. Don't wait until your lease is up in 60 days before you check your credit, simply because it's possible there's a collection on there you weren't aware of, or maybe you made a late payment, or maybe your credit score is 5 points lower than what it needs to be to qualify. And if you go over that with a mortgage broker, they can typically guide you through the process of how to maximize your credit score.
about too many credit inquiries? Is that something that is an issue? I know that sometimes that can actually lower your score. Is that correct?
That is correct. So with mortgages, it's a little different with mortgages than it is with other types of finance. Technically, with mortgages, you have a 2 week window that you can have your credit pulled, where it's not supposed to decrease your credit score. And the reason they do that is to give the client the ability to shop around a little bit without taking a hit to their score. The one big thing that I tell people to be careful of is, if you're buying a car, we see this a lot, where the dealership will send your information out to multiple banks to see what you qualify for, and you may end up with 10 to 15 inquiries all at once on your credit. And since that's not a inquiry for mortgages, for some reason they don't apply the 2 week rule to that situation. That can actually really decrease your credit score. I've had it happen personally. So, just pay attention to that if you're getting ready to buy a house and you're also considering buying a car. That's a good thing to talk to your broker about as far as debt ratio, and then also maybe line up your financing before you actually choose the car, so you don't have to deal with somebody, having causing that many inquiries on your credit, which could cause a problem with your score.
Sure, sure. Okay. Okay. Well, I'm a first-time home buyer. I've kind of been saving my down payment. I have a decent credit score. What other costs am I looking at in the mortgage process?
Basically, you've got your closing costs and you have your down payment. And people tend to confuse the two of them because when you bring that money to closing, you bring one lump sum of money. You don't pay for those two things separately. So it's important to make a distinction between closing costs and between down payment. So closing costs, on an average, just as a ballpark, you're looking at close to 4.5% of the value of the home. The higher the value of the home, that percentage usually decreases. The lower the value of the home or the purchase price of the home, that cost will increase as a percentage. So 4.5 is kind of a good rule of thumb to use. The down payment, that's going to depend on the type of loan you're getting. So anyways, you have to account for both of those separately, and you can get the seller of the property to pay towards your closing costs, but it's important to understand that the seller is not allowed to pay towards your down payment. They can pay towards closing costs, but not down payment. So you don't want to exceed your closing costs with seller assist, because that money will actually go back to the seller.
4.5% of the purchase price for closing costs. Is that a good estimate, a good rule of thumb?
I would say it is. Again, it's dependent on the purchase price exactly, but that's a pretty close estimate. You shouldn't be too far off of that unless somebody's possibly hitting you with costs that maybe are a little bit above the market, in my opinion.
Okay. All right. And then finally, if anyone wants to learn more about being a first-time home buyer in the state of Pennsylvania, how can they go about learning more from Principal Home Mortgage? Are you guys available for phone calls or emails or?
Yeah, we deal with this fairly frequently as far as walking people through the first time of purchasing a home, and it's a scenario where you need to be more available for the clients, simply because that client hasn't been through that process before, and it's a huge decision for them. So yeah, we're available: email, phone. Our website has some information that's good for people to review. But after you review that information, my suggestion is to call us. We don't charge anything for the consultation. We don't, as brokers, we don't get paid until we close a loan for you. So the information's free, and it's definitely good to have somebody look over your scenario so that you know exactly what you're getting into and you can plan accordingly.
Sure, sure. All right. Well, thank you, Shane. We appreciate you sitting down with us today to discuss first-time home buyers in the state of Pennsylvania, and hopefully we can talk again soon. And we look forward to our next video.
Sounds good, Gene.